Hello again, guys. It's John McLaughlin with Ajay Shaluga Enterprises. This is the second video I'm doing tonight that goes along with the previous video of the 4 stages of the market cycle. I guess it's not necessarily directly related, but I feel like they go kind of hand in hand. This one is on finding key levels, and I think that's an important thing that can help you kind of keep track of a stock's movement as it goes through the cycle. I guess is why I feel they go hand in hand. But you probably see on all of my reports, I'm giving key levels, significant levels for the stock. And on the charts that I share, you probably see the white lines across the charts, and that's what this video is about. What those levels are, what they mean, and how to draw them for yourself. So with that said, we're going to stick with Netflix, which we talked about in the market cycle video, and use that as our reference. So first, to explain, let me go back to where we started on the other video on the monthly chart. So first of all, what do we mean by a key level or a significant level? So a key level or a significant level is basically just a price point that a stock where you see repeated action at, okay, or repeated testing of a level, or repeated action at a particular level. So what this means, this is reference to kind of the idea of price memory. So stocks like to move to and between levels that it has previously been at. So the stock is drawn to levels that it has history at. Okay, now obviously when you're pushing to new highs and such, there is no price memory, and we'll talk about how to figure out where a stock is going on to new highs in a separate video. But on this one, we'll talk about the basic concept of significant levels. So again, starting with Netflix, we're starting on the monthly chart. This is a 10-year monthly chart for Netflix. So how do you find significant levels? Well, as we talked about in the market cycle video, you can find significant levels on any time frame that you're dealing with. Again, kind of the same as I said in the previous video, I think it's important, whether you're a long-term trader or a short-term trader. Obviously, if you're a long-term trader, you need to start with long-term charts. But even if you're a short-term trader, I think it's crucially important to focus on the long-term setup and long-term trends and the long-term cycle of a stock, because it provides crucial context to what's happening even in the short term. So that's why I'm starting on the 10th month chart. You can draw levels on a 5-minute chart, you can draw levels on a 15-minute chart, you can draw levels on any chart. I always start basically on the broader spectrums, at least on the daily, depending on my time availability and such, and how much, anyway, depending on the circumstances, I may draw them on the weekly or monthly chart. I never really draw my levels except for in rare circumstances when I'm really like trying to scalp something or something like that. But I never pretty much go below 4 hours, except for very rare occasions. So almost all of the levels you hear me talk about and share are drawn on at least a 4-hour chart, if not a daily chart, a weekly chart, or a monthly chart. So the broader the spectrum that you are looking at, the easier it is to find the most significant levels. Okay. So again, starting here on the 10-year monthly chart, how do we find significant levels? Well, basically what you're looking for is areas where you see repeated action on of the stock price. So looking at this chart, I see several levels jump out at me. Hopefully you kind of see them too, but once I explain it to you, I think you should start to see them more easily. So the first one that I see, I'm going to start kind of recent and work my way back, is right here. Okay. You see repeated action right? I'm moving a little bit. You'll see when I draw the line, but as you can see, you see repeated action right in this area. We see a test up here and then a pullback. These ones don't push quite as high, but similar. Here we get pretty much exactly almost the same level. Here we push a little bit higher and pull back. Again, not quite as high, but close enough. Not quite as high, but close enough. Here, same level, same level. Now, like I said, you're not going to be able to draw a level that is precisely accurate to every single wick and every single candle. But hopefully you see that there is some type of line here where we are getting a resistance. There's a resistance happening right here that's preventing the stock from going through up until here. Here it finally breaks through this ceiling. All right, so this is the first level that jumps out to me. Now, when I draw my levels, I like to stick particularly my primary level, what I would call my primary levels. And again, starting on the widest spectrum on this monthly chart, I'm going to try to stick to bodies of candles. So what I mean by the bodies, if you don't already know, the body is the thick part, and what the skinny part that sticks out on either side is called the wick. So I prefer to draw my primary levels on bodies, on the edges of bodies. So that makes me want to put my line right here at where these two candles meet. And you'll see, and when I do that, it matches up pretty good with these other wicks that are sticking out from these other candles back here when we kept testing it. Okay, we kept testing this level. And right here, if I put it right there, you see that line pretty much matches up perfectly with these two bodies, and it matches up pretty well, not perfectly, but pretty damn well with all those previous wicks. So to draw the line, you're going to go to your drawing here. This is all your drawing tools. You go to drawing tools, and price level is right here. The $ with a line under it, price level. Click that, and that's now my tool selected. All I have to do to draw my level is actually go to where I want the line at, which is right there, and then I double click. Now I have my white line there, which represents that price level, which is $569.51. Okay, so that's first level jumps out to me, and you can see once it broke through that level, we got a significant move higher. Okay, second level that I see that sticks out would be kind of the flip side of that level, which is the support level where we were stuck in when this is kind of range bound. We talked about it being a base in the market cycle video. All right, this is a base. Well, this next significant level, the most obvious next level I see is the support level for that base. Okay, where you see all this testing on the bottom side. Now again, I prefer to draw my lines sticking on bases, and usually your wicks will line up well with that. So I'm looking at these two candles here, and I'm going to kind of line my line up there with those bodies of those candles. Double click, boom. All right, so then I have my second level, 490.25. Okay. Now, depending on how comfortable you are with this, you might not want to draw a whole bunch of lines. I think, personally, the more you do it, the more comfortable you'll get, and the more levels you identify, the more information you have, and the better informed you can be about it. But you can keep it simple. You might have heard me say something about a line of least resistance. So, maybe you want to, let's say we think this downtrend might continue. So the next level that jumps out to me, similarly as the first one, is this top right here, where we see a top where things kind of struggled to break through. We couldn't quite break through, for however many months this is, we could not quite break through this ceiling. All right, now again, I'm not going to worry about perfectly lining it up with every wick. I'm going to hug this first body here, and I'm going to draw my line right on top of that body. And as you see, it lines up pretty well with the wicks. It lines up perfectly with these wicks here. Okay, even over here, it lines up nicely. We saw a wick below this line, and kind of come back up. So let's say I was down, looking at the downtrend, and I was saying, well, if this downtrend continues, this could be my line of least resistance, meaning if it breaks through this line here, it's going to continue falling. How far is it going to fall? Well, that's tough to say. You can use levels to do that, to kind of gauge that. Now, the most clear level that I see, again, similar as we did here, is the bottom range of this base level here. We got a range bound trading in this area where it's stuck in a range, and the next obvious significant level is the bottom of this base, which I'll put right around there. And you see we're hugging multiple bodies pretty much perfectly, not quite perfectly on that one, but very close enough. And you're not going to be perfect with it. There's no way to draw it like where it perfectly matches every single line. I would say the idea for me is with my primary lines, I want to hug as many bodies as I can. Okay. So you could say, well, if it breaks this quote unquote line of least resistance, there's potentially downside all the way to here. Now this is a huge zone because we're looking on the monthly. So, particularly depending on the time frame you're looking at, if you're day trading or short swing trading, I would not expect it to go from here to here. I mean, it could, but I would not expect it to. So there's obviously levels in between here, in between this range. So that's what I mean by you can keep it simple, but the more lines you have, the more information you're going to have. Okay. So, I could easily draw more lines. I see another one basically right at the bottom of these candles where it kind of had a little support level going on right here. And I could draw right there, around about. Okay, and that's 337. So that's 390. So that would be basically like a 30% drop. That's still 30%. So that's still pretty big. Okay, that's still a pretty big zone. So if you don't want to draw too many lines, you could leave it like this, and then you could just use kind of risk management tools, to protect yourself, if it doesn't drop this far. If it does, you could say once it drops below this level, I'm entering a put, and then use risk management basically to make sure that you don't get burnt. If you wanted to get more exact, I could continue drawing levels on this monthly chart, but it would be easier for me now to zoom in a little bit on time. So now I'm going to go into the 3-year weekly chart. Okay. So it gets, the more you zoom in, it gets a little bit, you're going to end up with more compact lines. Okay, you're going to end up with more compact lines. So I would see, again, you see several times where it basically has a top here, where in the context of these candles, it had trouble breaking through them. It did break through them briefly up to this next line, or close to this next line, and then pull back. But in between these two lines, you can see there's a little bit of a top here, which is acting as a resistance for these candles here. All right, so I could draw a level representing that right around here. Okay. So that's another target I could add. Okay, so now I have 3 potential targets. Once it breaks below our 391 level, I now have 3 targets. Okay, now again, this is still $30 here, or close to it. Yeah, $30. Not quite $30. So again, that's a fairly significant move. I could zoom in a little further. Let's look at the day chart. Okay, well, now there's not much to work with. Okay, because we're already way well past that. So now I kind of have to work with the weekly chart here. Okay, Or I could go, I have a 2-year daily chart here. I have both a 1-year daily chart and a 2-year daily chart. I could go to the 2-year daily chart, and that gives me a little bit more to work with here, back here. Okay. Now, again, you might need to zoom in a little bit and see what's going on. Okay, so now that I'm zooming in, now it's a little bit easier for me to see some levels. All right, so again, you kind of have a little top here where you have multiple tests of a level here. So if I wanted to draw a level representing that, I could put it right around here. And even going back, that kind of lines up pretty good with the several candles here. Lines up with that candle, lines up with this candle, lines up with this candle. Okay, so now I have another target here at 380. Okay, so you see how that works. Okay, and so you can draw, literally you could end up, and I do usually end up with, you know, lines all throughout my chart. Now this, to me, is another level here where I kind of have a top. Boom. Lines up here, lines up here, lines up here. And we got a test. We didn't quite get there, but we got a test there early. Lined up here, tried to break through, couldn't. Okay. So I won't, you know, I'm not going to completely mark this chart up as though I would possibly if I was, you know, in a actual charting session, because I don't want this video to be as long as the last one. But you hopefully get the idea. Basically, you're looking for ceilings of resistance that a stock struggled to break through, floors of support where it caught bounces, and as you can see here, ceilings become floors. So it struggled to get through this level here, our 391 level. It struggled to get through it, fell back down because it couldn't break through, came back up. All right, well, this time we really broke through it, and this is what I mean by needing confirmation. Okay, so if I had drawn, say I had drawn this 391 level back here, and I was like, okay, that's a level, because I could have recognized this level back here in 2020. I could have identified a level just off of these 4 or 5 candles. Okay, and then even when, and I could have made a trade plan and said, okay, when it pushes above this level, I'm going to take a call option. Well, you need to be mindful of confirmation. Okay, so just because it hits this level does not mean that I need to rush into my buy. As you see here, it pushed it up a little bit above my level here, but I got no confirmation that we were breaking through and moving higher. Particularly, as you see, that's a wick. So this is one of the reasons I like to stick to bodies, because what happened, this is a full day right here of trading. What happened was the price pushed up to this level, pushed up a little bit higher, and then it dropped and closed at this next level below us. And so you can see the relevance of the levels there. It pushed up, tried to break through that level, it could not, and then it ended up closing at the next level down. Okay, same thing happened 2 days later. It pushed up again to this level. It couldn't, it looks like, did it go a little higher? It did. It went a little higher than the actual level, and then it pulled back, could not break through, and it closed close to the other level. So you want confirmation, which is what we have here. So here, this day closed higher than my level. So if you wanted to be a little more aggressive, you could have bought your call option towards the end of this day, as it was closing, as you were confident that it was going to close above the level, you could have bought your call. Now, if you wanted to be a little safer, a little more, even more confident, you could have bought it somewhere early in this day. Okay, because you had confirmation. As you can see, the wick, it pushed back down a little bit, but then it ending up strong. And so you could have, once you got confirmation that it was moving higher that day, Once you've seen that we were indeed pushing higher that day, you could have took your call there. Now, you might say, well, I should have bought down here, but you had no confirmation. So we talked about that in the other video, wanting to be the first buyer, buy it at the perfectly low price. It's better and easier to make money knowing that you are in the uptrend as opposed to trying to beat the uptrend. Okay, so I would have probably recommended buying it somewhere early on this day. Once I got confirmation that it was pushing up, okay, I'll take my chances and enter the play. I would have set a stop loss that mirrored this level or was slightly below this level, because again, it could test this level. It could have came back down as it did. It came back down here, came back down here. I could have set my stop loss right at this level, but to give myself some grace room, I probably would have set my stop a little bit below this level, because it could test this level. It could try to go back below it and then bounce. So I would have entered somewhere early here, put a stop loss that reflected, a little bit below this level, and then took my chance there after my confirmation, as opposed to buying here. Now, you could have bought it at the end of that day and still, again, try to use a stop or something to protect yourself, and that would not have been necessarily a bad play. This would have just been higher confidence. This is pretty decent confidence because it closed higher than our level. So that's, it's not unreasonable if you bought it at the end of this day. This would have been even stronger confidence because you had to push away from this level. And now, as you see, it went up to our next level. Now, we wouldn't have had this level drawn at this time because it wouldn't have been here. But as you can see, it goes back to the levels. So even if we didn't have this level drawn here, we might have had a level drawn right around here. A couple days later, we could have added this level here. And then when we got this bounce here, when I got a confirmation here that we were bouncing, I could have had confidence, or at least reasonable probability, that we were going back up to this range because we went there before. Okay, so hopefully this is making sense. That is how you draw your levels. That is their significance. They are significant levels where you have history of the price being drawn to, and they are guideposts for where the price will go to. When I break through one level, I have a high confidence I'm going to the next level. When I break down through a level, I have a high confidence that I'm going to the next level. Okay, now again, as you see here, we got when it fell down here, it didn't go all the way to the level. Okay, so it's not an exact, you don't necessarily have to wait till it hits the dollar and the cent exactly, but they're guideposts. Okay, and you also need to realize that they're zones, because you cannot draw a line that perfectly matches every single nick of every single candle. So, that's kind of why I would say I would prefer buying in here, because even though this one pushed higher, there's no guarantee that that's a confirmation it's going over. Just because it's above our level of 391.19 doesn't necessarily, it's a range, it's a zone. So it could have easily fallen that next day and gone back down to the next level. So the levels are given to you when you draw them in a precise dollar and cent, but you need to think of them as a zone of action. Okay, so when I see 391.19, I'm actually thinking like 391 to 392 or something like that as a range of activity. Okay, and then the second thing, there's zone. The levels are a zone, and then you want confirmation. You don't necessarily buy as soon as it hits your level or as soon as it touches a level. That does not necessarily mean you automatically jump in and buy immediately. You want to see confirmation of what is happening. Okay, so that's what I got right now for price levels, significant levels. Again, If you have any questions or comments, please share them. You can write me, or preferably put them in the group so that everybody can see them. We can have a collaborative conversation about them. And I hope this helped, and we will get some more content for you in the near future. All right, y'all, take it easy.